Hi and welcome to this tutorial. In this tutorial I will show you how to perform currency strength analysis for short-term trading, also known as scalping. As you can see here on my desktop, I have a right side of my desktop and I have a left side. On the right side I have three instances of the currency strength indicator. So I have at the top the long term, in the middle the medium term, and at the bottom the short term. And if we have a look at the configuration of these utilities here, we can see that the top one, the look back is set to 0. And this is important because I want to see what the currencies are doing in the currently active session. So I know that if the euro is being bought aggressively and the dollar is being sold aggressively during, for example, the European session, that I want to be trading in the direction of these currency strengths and weaknesses in that session. That said, as soon as New York opens, things can turn around very quickly. So maybe the dollar will rally and the euro will sell off. And again, I want to be trading in the direction of the currencies for the given session. Here we have the minimum session look back set to 120, which says that let's assume that the session has only been open for 5 minutes. Having a look back of 5 periods doesn't really make a whole lot of sense. So we want to see at least 2 hours of look back or currency strength information. Otherwise, things are going to be a little bit too choppy and we're not going to get enough accurate information or strength readings. And then here I have enable static period set to true, and the static period is set to M1, so we're certain that we're seeing minute information. So that's the top one, the long term. Long term meaning a maximum of roughly 8 hours, or the length of a given session. We look at the medium term here. We can see here that the look back is set to 60, so we're looking at the past 60 periods, which in this situation is 60 minutes or 1 hour. We enable the static period to true, we set to true, and we ensure that the static period says M1. And that's that. We press OK, and for the bottom one here, we want to see the past 15 minutes. So again, the look back, here we set to 15, enable static period is true, and the static period is set to M1. Then we're good to go. So here we can see all of the strength information that we need in order to trade short term. So we know what's going on for the given currencies during each session. We know what's going on for the currencies over the course of the past hour and over the past 50 minutes. So this is great. We have a very good insight into what the currencies are doing in the relatively recent past. So this is super. This is all the information that we need. We look over to the left here, we can see that I have my currency pair chart here, and below I have 3 instances of the indicator. But here I have enabled an option called display active currencies only. So when this is set to true, the indicator will look at the instrument that we're trading, which here is the pound Australian dollar, and it will only show us these 2 currencies. So the pound being the red and the Australian dollar being the orange. Here you can see the pound and the Australian dollar here. So now we're looking at again the past session, or currently the past 120 minutes if there's not 2 hours, if we're not at least 2 hours into the session. And we set the enable static period to true and the static period to M1. So again we're forcing the application to show us minute data. Then the next one here, we want to see the same information as we can see here, but here we're going to ensure that we're again only viewing the currently active currencies. Again, ensuring that we have enable static period set to true and the static period set to M1. We go to the short term, we can see here we have again the same as here, the shorter term, 15 minutes, display active currencies only set to true, enable static period set to true, and the static period is set to M1. And again, when you see M1 here, the values that you can put in here correspond to the values that you can see in the MT4 period buttons just here. So that's that. So what do we want to do here? Well, I think in order to identify a currency or 2 currencies that are diverging in strength, we'll probably have to go a little bit back in time. So let's disable the automatic scroll, because we're late into the New York session, actually the New York is just about to close, and so we're not going to see a whole lot of volume here. So what we do like to see is we like to see a nice spread here. As you can see here, we can see that we've had the pound, which was quite strong over the past few hours, and we can see here that it's slowly dwindling down here and losing some strength. And today we have the elections in the UK, which could explain what we're seeing here. And here we can see that we have the pound here, we have the Canadian dollar, the magenta or pink color, and you can see they're quite strong, both of them, and we can see how they've kind of drawn in towards the middle here. And this again is because that we're in between sessions, and so there's not a lot of volume and there's not a lot of buying going on or selling, and so the strengths of the individual currencies will tend to merge towards the zero line here. And here on the short term, we can see that we can of course see quick bursts of momentum, but nothing that we're really going to see a whole lot of follow through with between sessions. So we want to look at session opens and trade around the opens of these sessions and during the first few hours of each session. So we can trade between, for example, 8 in the morning London time until midday, 12 o'clock, 1 o'clock, and then we can do the same for the New York. So we trade the New York session open at 8 o'clock in New York and 4 to 5 hours into the session. And that's all I like to trade, actually. Generally I like to trade the open of the sessions and leave it at that, and I don't trade the Asian, the range, primarily because I'm in bed, but also because there's not a whole lot of action going on in the Asian session, so I like to generally wait for the London session or the New York session. So what we want to see here, we want to see diverging currencies here, and let's see if we can find something. We scan through the charts here, so we can see, I have to go into the minute chart. We can see here that we have the orange, which is the Australian dollar, and the green, which is the American dollar. And we can see here that they crossed here, and we could see that there was a push higher on the Australian dollar and a push lower on the American dollar, which caused this push from here up to about here. If we have like some other pairs, you can see here that the yen, which is the purple, and the green, which is the American dollar, they're very intertwined, which explains this sideways movement here. And this is not a pair that you want to trade. When they're sideways like this and kind of braided together, you want to step aside and wait for a more active pair, diverging pairs. Let's see if we can find something here. I'd like to show a few examples that I posted via Twitter that I think illustrate very clearly what we're looking for here. Okay, if we see here, we have this example here. This is a very nice symmetrical currency strength divergence on the euro Japanese yen. As you can see, the euro is the blue one and the Japanese yen is the purple one here. We have this grey box here, and the grey box simply tells us where the session opens. So this is going to be the European session, which opened just here. And you can see here that we had the first 15 minutes of trading, and then right here you can see that the currency strengths diverged very, very strongly, and this pushed price lower for the next few hours. And when you can see that we have the lines almost mirroring one another, one positive and one negative, this is a really good pair to trade, because we know that the strength in the yen and the weakness in the euro is actually happening on the euro Japanese yen pair. So you know that this pair is the one that's being sold, and this is the one that's causing this currency strength divergence. You can see here, this is the shorter period here, which is the 15-minute, and you can see that it's beautiful. It looks like a butterfly almost. So this is an ideal setup, and you're not going to see a lot of these. You'll probably see maybe 5 or 6 of these out of 10, but these are optimal. But they're not going to look. They're not going to all look like this. If we have a look at another example, you can see here we have the same situation or a similar situation on the euro US dollar. And while this is semi-symmetrical, it's not perfect, it's not as nice as this example as we can see here. But again, this is still a valid trade. And so we had the session open box, and you can see here that when price broke out, we had a very strong rally on the dollar and a sell-off on the euro, which caused price to move lower here. And each pink line here denotes 10 pips. So price move 10, 20, 30, 40, 50, it's about 60 pips at the time this screenshot was taken. And I believe it rallied up to this level of supply and then continued to rally lower. If we have a look at another example, here we have a really nice one. This is the pound, which is the red, and the Swiss franc, which is the lime green. And this is looking pretty symmetrical to me. And this is the session box that you can see here. This is the past hour, and this is the past 15 minutes or so. You can see here that the price broke out here, and we had kind of a clear reading, but there wasn't a whole lot of follow through here. Then it pulled back into the box, and then afterwards it continued to move higher, and then it kept going for a lot of pips, 100 or so pips. That's a very good example there. We have another one of the euro yen, euro being the blue and the yen being the violet or purple. You can see that the price was maintained inside this 15-minute session box, and then we had this divergence. You can see here that the euro took over in strength and the yen sold off here, and this happened about right here, so we're still within the box. So when price moved up like that and then stuck to this level here just below, building up, accumulating orders, and you can see that this happened because this was starting to grow and this was starting to increase here, and then price broke out and then it continued for 100, 120 pips or so. Here we have another example where we can see the yen and the Canadian dollar are moving lower here due to the symmetrical currency strength divergence, where we can see a very nice example here. And this example here compared to this example here is simply, I've taken the currency strength boxes and I've put them on top of one another. So in this picture they're overlaid, which is what I prefer. We have another example here where we can see that the Canadian dollar is picking up and the Swiss franc is slowly selling off. And this isn't perfect, but this is what you're going to see the majority of the times. You're going to have to be comfortable looking at a little bit of a mess like this and being able to look through the noise and assess who's in charge here. And it's very clear that the Canadian dollar is in charge. Here you have something on the pound. We have the pound, which is the red, and the dollar, which is the green here. And the pound, of course, is rallying very strongly in relation to the American dollar, which caused this push higher. And so this is what you want to look for. You want to look for diverging, a gradual increase in strength in one currency and a gradual decrease in strength on another. And then the best examples is when you have a gradual divergence and then all of a sudden a sudden burst of momentum, like you can kind of see on the shorter periods here, the thin red line here and the thin green line here, how they very aggressively diverge. This is a very good indication that price is going to move in the direction of the strength. And this is from today, and this shows what's been going on over the past session, and this is later in the European session. And you can see here that the Swiss franc was this is actually beautiful because we have a lot of different currencies to choose from. We have the Swiss franc, which moved higher. Again, a gradual increase, and then it pulled back, and then it kept going, and this continued until the New York session opened, and then the Swiss franc started to sell off. We have a really nice example here of the Australian dollar, which is just selling off very gradually, and it keeps doing it. And this happened throughout the entire European session today. So this is a really good example here. You can see how we have 4 currencies that are strong and 4 that are weak. So there's a lot to do here, a lot to do. So this could keep us busy. So this is ultimately what we're looking for when we're looking for currency strengths diverging. And I watch them in these windows first, and when I find the currencies that I feel are strong and will continue to grow in strength, I normally write them on my whiteboard in green. And so I have my green currencies that are strong, and then I have my red currencies which are weak, and then I pair them and I analyze each pair and I find the one that's most optimal and I trade that one. So I'm not trading all of them, I'm qualifying the one that I feel is the most higher probable, and then I take this one, and that's that. And some days there are no trades, and if this is the case, then it's best to sit on your hands and do something else, because forcing these things to happen will almost always get you into trouble. But that's it. I hope you found value in this indicator. If you have any questions, please feel free to get in touch with me. Thanks for watching.